Welcome. Today, we're taking a deep dive into a company that's really been rattling the financial world, Robinhood. You've sent us some fascinating sources, their 2025 company overview, recent news. And our mission today is, well, to cut through the noise. We want to understand the factual drivers behind their huge rise and, their changing role in digital finance. Okay, let's unpack this.
Absolutely. And for you as an investor, really getting a handle on Robinhood's recent path and their strategic shifts, it's not just interesting, it's pretty crucial. We'll zero in on the factual developments, the things that have really fueled this stock rally, positioning them not just as, a trading app, but maybe as a serious contender in the whole digital asset space.
Okay, let's kick things off with the numbers then, the ones that really jump off the page. The sources clearly show Robinhood's stock, H Wood, has just skyrocketed. We're talking over 300% since April 2025, hitting all-time highs above $93. That pushes its market cap to nearly, $36.9 billion by July 2025. That figure really struck me.
Yeah, it's huge. And what's really fascinating here isn't just the surge itself, but how they've actually done it. I mean, Robinhood, founded back in 2013 by Vlad Tenev and Bayou Bot, their mission was always democratize finance for all, but they've strategically evolved. The material you sent points to a very deliberate shift from what many saw as just a meme stock brokerage into becoming a global digital asset platform. And that's not just talk. It seems like a real pivot.
That is a huge pivot from their early days, yeah.
Uh,
But what exactly, what were the specific moves in their strategy? What allowed them to not just bounce back, but achieve this kind of explosive growth? Were there key things that really moved the needle on valuation?
Well, the sources lay out several quite aggressive key strategic moves. First, there was that audacious launch of tokenized U.S. stocks in Europe. And that wasn't just about geography. Offering 204/7 commission-free trading using Arbitrum Layer 2, that's a blockchain scaling solution, make things faster, cheaper. That's fundamentally changing how people access markets.
Right, 204/7 trading is a game changer.
Exactly. Then the acquisition of Bitstamp. Now, this seems designed to seriously expand their global crypto infrastructure. It moves them towards more robust, maybe institutional-grade digital asset stuff. And yeah, you mentioned it, introducing perpetual futures, those crypto contracts without an expiry date, plus new staking rewards so users earn passive income holding crypto, and these new AI-based investing tools. That all played a part. You combine that with positive analyst upgrades, BOFO, Goldman Sachs, and it really helped fuel that valuation surge.
Okay, those are definitely aggressive plays. It shows they aren't just sitting back.
Yeah.
But how do these big moves translate into, actual revenue for the company? Because that's what investors really need to understand, right?
Exactly, yeah. Their core stuff is still there. Zero commission trading for stocks, ETFs, options, plus crypto. But they've expanded. Robinhood Gold gives you premium data, margin. They've got retirement accounts now, IRAs, cash management too. So the revenue streams, which are critical for any investor to look at, come from payment for order flow, PFOF. That's where brokers get paid to route orders. It's drawn scrutiny, definitely. But also gold subscriptions, interest income from margin lending and idle cash, interchange fees, and crypto trading and lending.
Okay. So it sounds as if they've done a decent job diversifying how they make money.
Huh?
That's usually key for stability. But with all that diversification and expansion, they must be bumping up against a much wider range of competitors now, aren't they?
Oh, absolutely. The sources list quite a broad competitive landscape. You've got the legacy brokers like Charles Schwab, Fidelity, then the other fintechs, SoFi, Webull, major crypto platforms like Coinbase and Binance, and even global neobanks such as Revolut. They've really broadened the field they're playing on.
It's almost like they decided to just sprint while everyone else was maybe jogging.
Yeah.
But, any sprint like that, especially in finance, comes with risks, challenges. What hurdles do the sources highlight for Robinhood moving forward?
They definitely do. I mean, while the growth is impressive, the sources point to some ongoing challenges you really need to be aware of. There's continued regulatory scrutiny, especially over PFOF and their crypto operations. That hasn't gone away. Then there's their history, trading outages, disclosure issues in the past, and interestingly, increasing competition from DeFi, decentralized finance protocols, those blockchain apps without the middleman.
Okay, so putting it all together, what does this really mean for you, the listener? Robinhood's journey, it seems, from just a commission-free app to this rapidly expanding digital finance platform. It's clearly driven by some really aggressive moves into crypto and global markets,
Yeah.
sort of bridging TradFi and blockchain finance.
Yeah, and if you connect this to the bigger picture, Robinhood's path really highlights just how fast these digital financial platforms are evolving, redefining themselves. It leaves us with, I think, an important question for you to consider. As companies like Robinhood keep pushing the boundaries of what a financial services platform even is, how might this fundamentally reshape the whole investment landscape for retail investors like you in the coming years?